All right, so let's paint a picture here, okay? Imagine you open up your portfolio and all your tech stocks are down, way down.
Yeah.
We're talking the Nasdaq is officially in correction territory. It's fallen 13% since last December. Investors are definitely starting to sweat a little bit.
Right.
And now the big question everyone's asking is, should I cut my losses and run? Or is this like the perfect moment to buy the dip? I mean, that's what everyone wants to know, right?
Well, that's exactly what we're going to dive into today.
Absolutely. And, you know, we're zeroing in on two AI companies in particular that have really taken a beating. Broadcom and the Trade Desk.
Yeah.
They're down 20% and a crazy 49% so far this year.
Ouch, 49%. That's a rough start to 2025, I'll tell you.
Yeah.
So for today's deep dive, we're turning to an article from The Motley Fool. I think most folks know them. They're a pretty solid financial services company. And their take is that this sell-off, well, it might actually be a chance to snag some real bargains in the market.
Oh, interesting.
But you know us. We always like to look past the headlines, right? See if those arguments really hold up.
Yeah.
So let's get into it. Yeah, let's dig in. It's important to grasp the bigger picture first, you know? The Motley Fool is pointing to a couple of things driving this tech slump. One is just the rising anxiety around this ongoing trade war, which could mean, higher manufacturing costs down the line.
Yeah, trade wars. Nobody wins with those, right? It always makes investors nervous.
Exactly. Nobody wants uncertainty. And the second thing is that you have some investors just shifting their money to what they see as less risky assets. It's kind of like when a storm hits, everyone wants to find a safe harbor,
Makes sense.
But is that the smartest move? Especially when you look at the Nasdaq 100 index, it's currently at a PE ratio of 30x.
30x? What does that even mean?
Okay, so basically, the price-to-earnings ratio, or PE ratio, it tells you how much investors are willing to pay for each dollar of a company's earnings. So 30x means that for every dollar of earnings, investors are shelling out $30 for a share in those companies.
Okay, so that's our baseline, right? That gives some context for the whole market. But let's get specific here. Let's talk the Trade Desk TTD. 49% drop. I mean, that's not just a dip, it's a plunge. Is it possible that folks are just overreacting?
Well, the article seems to think that might be the case. Right now, TTD is trading at 12 times its sales, which, if you compare it to late 2024, it was at 25 times sales.
So yeah, on the surface, it looks like a steal. But why the sudden freefall? What happened?
Well, it seems TTD missed its revenue targets last quarter, Q4 of 2024. And the blame seems to be on some internal restructuring they did, some changes they made to their sales force. So yeah, there are definitely some question marks around their short-term performance.
Short-term worries, but what about the long game? I mean, what's their potential down the road?
That's where things get really interesting. So TTD, they're in the programmatic advertising market, right? Basically, it's all automated buying and selling of ads online.
Yeah.
And get this market is projected to hit an insane $2.75 trillion by 2030.
Whoa. Hold on. 2.75 trillion. That's a trillion with a T, right?
Trillion with a T. That's a massive market.
It's a whole lot of digital ads.
It is. And here's the thing. TTD, they've been incorporating AI tools into their platform since 2017.
So they're ahead of the curve.
Exactly. Which could mean they're in a prime spot to be a major player in the future of ad tech. Think about it. AI can just analyze mountains of data, right?
Yeah.
Then target ads with laser precision. And that's a huge advantage as the world of digital advertising gets more and more complex.
Right. So even though they hit a rough patch, TTD is still putting its chips on AI to fuel its growth in the future.
Exactly. And the article highlights this point. AI adoption in digital advertising is predicted to grow by 22.5% every year until 2033. That's a huge growth rate. So TTD, they're definitely playing in the right arena.
So tons of potential upside with TTD if they can navigate these short-term issues.
That's the million-dollar question, right? And here's another nugget of info round. Analysts are saying TTD's growth is going to bounce back big time. They're predicting it could hit a 36% increase in earnings per share this year, bringing them to $6.61 a share.
Wow, 36%.
Yeah.
It's a pretty impressive comeback if they pull it off, especially after that recent setback.
Yeah, it is. And keep in mind, the Motley Fool themselves, they're recommending TTD as a buy.
Okay, so TTD, high growth, high reward, but with some risk involved. Now let's shift gears a bit and talk about Broadcom, AVGO. Their stock is also down, but not quite as dramatically as TTD. What's their story?
Oh,
Yeah.
Well, AVGO is down about 20% this year so far. Not great, but hey, not as bad as TTD's plummet.
Right. It's definitely not a good look. But what's really got my attention is their AI revenue growth. It's through the roof, up 77% year over year in Q1 of 2025. They even blew past their own projections.
Yeah, and you know what's interesting here? Broadcom's story, it's not really about bouncing back from setbacks. It's more about riding this massive AI wave that's already happening.
So they're not just testing the waters with AI, they're going all in. What's their strategy, though? How are they doing this?
Well, their focus right now is on these 3 hyperscale cloud customers. You know, the big names everyone's heard of. And Broadcom estimates a potential market of something like $60 to $90 billion from just those 3 clients over the next 3 years. That's billion with a B.
That's mind-blowing. And that's not even counting those 4 other hyperscalers they're working with. It's a gigantic opportunity for growth.
Absolutely. And they're not just talking about it either. Broadcom's already seeing a $16 billion annual run rate for their AI revenue. So they're already in a really strong position to grab an even bigger chunk of that market.
So it seems like TTD is trying to get back on track with their growth, while AVGO is already riding fine on this AI wave. It's like they're 2 ships passing each other in the night, going in totally different directions.
I like that analogy. It makes you think. Which ship would you rather be on? And if you think back to that PE ratio we talked about earlier, AVGO, it's currently at a pretty attractive 28 times forward earnings. And remember, the Nasdaq 100 average is 30.
Yeah, so AVGO's valuation seems pretty reasonable, especially when you consider their explosive growth. But we can't forget there's always some level of risk with any investment, right?
Of course. That's why you got to weigh the potential rewards against those risks. With TTD, you've got a company facing some short-term obstacles. But they're also well-positioned for potential long-term dominance in a market that's absolutely booming.
Right, it's like a promising startup that's still working out a few kinks.
Exactly. But then with AVGO, you have a more established player that's already showing massive AI revenue growth. And they're ready for even bigger expansion. It's more like a steady ship sailing in familiar waters.
So we've got 2 different companies, 2 different approaches to AI, and 2 different levels of risk.
Right. And this brings up a really important question for you. Which company seems more promising to you right now? What factors would you consider before deciding to invest?
Well, if you're the kind of investor who's in it for the long haul, willing to ride out some ups and downs for a chance at big gains down the line, TTD might be worth a look, even with those recent setbacks.
But if you're looking for something a bit more stable and prefer to see those returns sooner rather than later, AVGO's current performance and their strong outlook might be a better fit.
It really depends on your own individual goals and your risk tolerance. There's no one right answer. But knowing your own investment style is key.
And that's what I love about these deep dives. We're not just spitting out facts and figures. We're really thinking critically about the information and figuring out how it applies to real-life situations.
Exactly. So let's bring it back to that initial question from the Motley Fool. Is this tech sell-off, specifically in AI stocks, is this a buying opportunity?
Well, there are definitely some solid arguments on both sides. You've got concerns like the trade war and potential manufacturing cost increases. Those are very real risks.
Yeah, those are valid points. But then you've also got the incredible, almost unstoppable growth potential of AI.
Yeah.
That's pretty hard to ignore.
It's the classic dilemma, risk versus reward. How much risk are you willing to take for the potential of a really big payoff?
And that's where research and due diligence come in.
Yeah.
You don't want to just jump in because an article, even one from a respected source like the Motley Fool, says it's a good idea. You've got to do your homework. Understand these companies inside and out and make sure their strategies line up with your own investment goals.
This deep dive's given you a good foundation, but it's really just the starting point. There's a lot more to explore out there.
We've only scratched the surface of the AI world. There's so much more to discover.
That's right. And that brings us to this thought-provoking point. The AI sector is definitely going through a period of explosive growth. But like with any investment, careful research and thinking about your own personal circumstances is super important.
We're talking about potentially life-changing financial decisions here. It's not something to be taken lightly.
Absolutely. And beyond just the financial side, there are other questions worth considering. Are there other AI stocks out there that might be worth checking out?
Ooh, that's a good question. And on a bigger scale, what are the ethical implications that come with this rapid advancement of AI?
Those are crucial questions we all need to be thinking about as AI becomes more and more a part of our lives.
This deep dive has been incredible. We haven't just explored these 2 AI stocks, but we've also touched on the bigger economic forces at work and the ethical questions surrounding AI. It's not just about numbers and stock prices. It's about understanding the forces shaping our future.
And that's what makes it so fascinating. The world of AI is constantly changing and evolving, so stay curious, keep learning, and never be afraid to ask questions.
Very well said. So on that note, we're going to wrap up this deep dive into the world of AI stocks. Thanks for joining us on this journey.
Until next time, keep exploring.
And keep diving deep.
It really is, you know. It reminds me of that saying, give a man a fish and you feed him for a day. Teach a man a fish and you feed him for a lifetime. We're not giving you all the answers here, right? We're giving you the knowledge and the tools so you can make those decisions yourself.
It's all about empowering you, the listener, to be a smarter investor. And, a more engaged citizen in this world that's changing so fast.
Exactly. And that's why we're always encouraging you to go beyond just our deep dive. Do your own research, dig into those company reports, see what other people are saying, and most importantly, think critically about the information you come across.
We're just giving you a little taste of what's out there. The real fun starts when you go exploring on your own. Who knows what kind of amazing insights you might find.
And don't forget, the world of AI is just getting going. This is just the beginning of this tech revolution that's going to impact every part of our lives. So stay curious, keep learning, and never be afraid to ask questions.
Well said. And on that note, we're going to wrap up this deep dive into AI stocks. Thanks for coming along with us on this journey.
Until next time, keep exploring.
And keep diving deep.